So this is a technology, it's a computing language, and I can build an app on it.
Is Bitcoin the currency of the future?
Crypto gang, it's the gang, big gang, all gang, like gang. Hey guys, welcome back to Minus Money. In this video, we are going to talk about Bitcoin. Bitcoin is everywhere. Unless you were living in a cave, you've probably heard about it multiple times in the media. You can't enjoy a sports match without watching a commercial of cryptocurrencies. And quite recently, Bitcoin has fallen below the $30,000 mark for the first time since July last year. Why is Bitcoin dropping so fast? And is this a good opportunity to buy the dip? Let us investigate in this video. Unlike stocks, real estate, and gold, which represent tangible things, Bitcoin is a digital currency that allows online payments without the need for a middleman. Bitcoin is considered by many as the next big thing since the invention of internet. Unlike fiat currency, Bitcoin does not require a permission from banks or governments to send or receive payments globally. What's more attractive about Bitcoin for investors is its limited supply. There will only ever be 21 million Bitcoins created, and they are generated at a predictable rate. Bitcoin is scarce and deflationary.
Biggest example of that would simply be just looking at Bitcoin's supply issuance and plotting over that the amount of user growth over time. And as you see, Bitcoin is becoming more and more scarce over time, and we've got an exponential amount of new users coming in, and that's about as simple as it gets.
Apart from that, Bitcoin is permissionless, immune to seizure, censorship resistant, decentralized, open source, so on and so forth. Bitcoin's adoption has grown exponentially since its launch in 2009. Coinbase Global CEO Brian Armstrong believes 1 billion people will use cryptocurrency technology in one way or the other by the end of this decade.
It's inclusive, it's democratized, it's global, and I just think that's going to be such a net good for the world. And it's growing kind of like what it looked like in the early days of the internet. So,
speaking of adoption, there is a whole country buying Bitcoin on every dip. Bitcoin, however, has no intrinsic value. Bitcoin's price is solely the result of what investors are willing to pay. It's a sentiment driven market, and there is no limit to how high or low it can go. Since its launch in 2009, its adherents have promoted it as an inflationary hedge, like a new version of gold. But it has behaved more and more like the US tech stocks. The 90-day correlation coefficient of Bitcoin and tech stocks now stands above 0.67, the highest since 2010. Many believe that over the next decade, cryptocurrencies and blockchain technology could transform the global financial system. They may be true, but does that mean you pour your whole savings into cryptocurrencies? No. A harsh irony of investing is that you can be right about the future and still be wrong about how to profit from it. Cryptocurrencies and decentralization may be the future, but there is no assurance that Bitcoin will maintain its dominance as a digital form of money. What if there is a government crackdown, or what if the government or a private player launches its own cryptocurrency and steals the market share from Bitcoin? There are doubts to what extent crypto's promise of decentralization and distribution of power is true. For example, Bitcoin's ownership is concentrated in the hands of few wealthy individuals. Since the price of Bitcoin or any other cryptocurrency is determined by what the other person is willing to pay for it, capitalists and entrepreneurs from the crypto community have become good at selling dreams to people. As David writes, never underestimate the power of a lot of money and scam verbiage to persuade a lot of people to do something. And the complexity of crypto makes it difficult to identify a genuine project from a scam. Now that we have understood the narratives of pro and anti Bitcoin, it is up to you to decide if Bitcoin is worth your time and money. Let us try to understand why Bitcoin has been falling so sharply. Bitcoin has tumbled below $30,000 for the first time since July of last year. With more and more institutional investors trading crypto, the market is moving in tandem with equity markets like S&P 500 and Nasdaq. Hawkish commentary from the Fed has left investors panicking, and they are pulling out money from risky assets, including stocks and cryptocurrencies. China's zero COVID policy and Russia-Ukraine conflict is further complicating things. Fall of Terra ecosystem has further dampened the spirits of crypto investors. What do you reckon? Where do you think Bitcoin is headed? Are you buying the dip? Let me know in the comment section.
I don't really ever buy stocks, man. Haters wanna say I'm in a bubble, man. Chew 'em up like bubble gum. Just made a meal with my pocket change.